From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm David Moss from Fox 8 Cleveland, guest hosting the Financial Quarterback.
And I'm Jim Lineweaver, your financial quarterback since 1993.
And you know, Jim, we have you on at least once a month on New Day, and you always have lots of valuable information to share, but everyone's finances are a little different. Everyone has different questions about finances, so we're back with another edition of Stump the Quarterback to answer the questions that were submitted directly through your website.
Yeah, we are, and I want to remind the viewers that if they do submit questions, and like we had a lot this time, and we pick it for the show, then what's going to happen is they're going to get a $100 gift certificate to Lot Keepers.
Great. So what kind of question, what are we going to deal with today?
Today we had a general question, which is not always easy to ask, but how do I lower my taxes?
Who doesn't want to?
Yeah, right, exactly. So everybody's situation's different. So I thought it'd be best to pull an example through that actually Mark Sipus, the director of our tax company, actually coordinated with myself and the client, because this client wanted to actually buy a new car, and it was going to run them about $80,000. So this is a situation where it's a married couple, they're over age 65, they're going to have that $24,000 standard deduction. They also pick up another credit because of the being over age 65, so they get another $2,600 there. And then we had structured the portfolio because through the years they're going to want additional income. So we had a lot of municipal bonds. In this case, the interest coming off that was about $30,000, and then they had Social Security income of about $28,000. And so then here comes this car. How do we buy it? Right. So there's a special, and it's not a loophole. It's black and white in the tax code, but it says if your capital gains as a married couple are below a certain threshold, you might not pay any federal taxes on this. And so in this case scenario, we were able to sell about $80,000 to help get them a car. So their total income was $138,000 for the year, but guess what? They paid zero federal income taxes.
Let me check my hearing here. They paid no federal taxes?
Right.
How do you do that?
Yeah, well, part of it is this capital gain rule that I mentioned. So when you combine this, and this is where the strategy comes into play. Good tax planning is not just about crunching numbers at the end of the year or maybe after the end of the year, which is too late. It's about running pro formas for what you're trying to accomplish and being proactive with the tax code.
So, I mean, that's a lot of work, a lot of numbers, a lot of different people work on that kind of thing. So a very specific situation, and it might not apply to everybody. I mean, not everybody's situation is the same.
Exactly. Everybody's situation, matter of fact, is usually always different. But that's why if you can really coordinate the financial, tax, legal, and insurance for a client, especially in this case scenario, where normally they might have just taken $80,000 out of their IRA and maybe even caused additional taxes on their Social Security. So it's really important to make sure that you're real proactive and meet with a team of professionals for these decisions that you need to make in a successful retirement.
So, if you have questions for Jim about your finances, how you can help maximize your retirement, minimize your taxes, and everything in between, you can ask, and we may answer live on air. And if your question is chosen, we'll even send you a gift card to submit your questions. Just go to lineweaver.net and look for Stump the Quarterback graphic. You'll see it right now on the lower right. And get good answers to your tough financial questions today. Now here's Fox News Sunday.